as traders, we have to master the ability to react to what is being presented to us in the moment, which is one of the hardest things that any human could attempt to overcome because of everything that's installed in us all of our lives. And most of us coming into the trading environment are already in our 20s, some of us in our 30s, and in your case, Aqua, in your 40s. So you literally have to unwire yourself from 40 years of programming. Going over the trade for today, I'm not going to sit here and beat myself up because I obviously, of course, could have held this a little bit longer. I
Mhm.
sold after we started to see a failure to break above the bottom of this buy delta here, which I'm not upset about. Still just sticking to my plan. Once a high is violated, I was seeing on the order flow that buyers were trapped. And then I was seeing failure via buyers to become aggressive to break above and push through this as a resistance. And so I sold the position. Not too bad. Made a quick $1,000 on three accounts and then $600 on two other accounts today. So not too bad. A couple thousand across the board. But I want to break this down for you guys because Aqua had said that he was having a hard time. Aqua, what did you say? Just so I'm not, putting words in your mouth when
Yeah,
you.
yeah. I just did not see. All right, so like right there, or I can't put my annotation, huh? All right, so pretty much in a nutshell, I don't see a break of structure at all until the fucking move makes its own break of structure. Like if you go back to like 8:30 and that deep dive, how it nosedived right at
Mhm.
the beginning, right? Before that, I don't see any break of structure to signify, hey, or to signal like, oh, we're gonna be going to the top side soon. Like all these were like, I felt like we're pretty much, and this high is actually lower than this other high at 7 o'clock or whatever time that was.
Sweet.
So like, yeah, that's how my eyes are seeing things, right? I'm just being real, and maybe
Yeah,
I'm, yeah. Go ahead.
no big deal. So, as always, I try to start with my trading sessions thinking logically, right? Because these market makers, we have to understand that and they don't trade off of emotions. Most institutions in the space have computers and AI that facilitate their orders for them. It's not humans like we are as retail traders making active decisions involving our capital in this space. So I'm always thinking first to just kind of start off on how I was able to gauge this position today. Where did New York session sell from before if the market's bearish? Because if the market's at a low, New York session gets past price action and all previous sessions sold off. But then New York session gets past price at a low. They're not going to keep selling from a low, they're likely going to push price up and then sell from a premium. And then same thing as above, so below. Think about that mindset as well inversely. If previous sessions bought and they bought from a discount and New York session gets past price action at a premium or at a high comparative to where they bought from maybe a day before or where Asia session bought from or where London session bought from, well, then they're likely going to attempt to dump price or push price down into a discount and then buy, right?
Okay.
So I always apply that logic first when I'm kind of like doing my pre-market analysis. So starting with the higher time frame, we can see even if we just go to maybe the 15 minute is not high enough, but we'll take a look real fast. Okay, so the 15 minute isn't that bad. So yesterday, I know that we don't have our session indicators on, but if we look collectively speaking where New York session or where London session sold from yesterday's session, or even during the overnight trading hours, that was all here in this area, right? New York session sold from all the way up here yesterday. Asia session sold from all in here. London session sold from all in here. And so today, when New York session got past price action, I applied my logic and I'm like, well, if they sold from a premium yesterday, i.e., higher prices, Asia sold from higher prices, London sold from higher prices. When New York session gets past price action, everybody's going to be thinking today that the market's just going to continue to dump. But in reality, these market makers don't move price like that. So I applied that logic. That was number one. Number two, on the higher time frame, so I always try to teach you guys to pay attention to the higher time frames, like the hourly and above. Well,
Okay.
we can see clear as day, this was an area of interest back on November 7th that the market makers were buying from. And if we go back a little bit even further in time, we have an area of interest here where back on October 17th, the market makers were buying from. And so I was simply saying to myself, again, thinking about the logic that I just applied, if yesterday New York session sold from a premium, overnight trading hours, Asia and London sold from a premium, and now prices at a discount on the higher time frame where previous New York sessions bought from months ago, and in some cases days ago, then what's likely going to happen is they're going to buy at a discount. And if they are going to sell today, they're going to dump it from a premium after they buy price. So
Hmm.
that was just kind of like my logical thinking, just to explain my brain and my mindset going into today's trade during my pre-market analysis. Second, we'll layer on the deltas. All right. So obviously, of course, you guys have access to those in the S&P 500 section. And right here, you can see we have the 24728 institutional dark pool, and that is resting slightly above the institutional delta with the coordinates of 24663 and 24729. So that also played a role in my trading session today where I said, okay, if we're at a dark pool and we're at a buy delta and price cannot break bearish underneath of them, then the likely scenario is again that we're going to see some bullish activity and price get pushed up into a premium. So I'm just trying to kind of explain my thought process so you guys can start to formulate your pre-market analysis in that fashion, and start thinking logically instead of like emotionally attached to, oh shit, the market was bearish in previous sessions, so it's going to continue to dump. If you think that,
That's
yeah, go ahead.
that's exactly where my mind was at this sunrise, bro. But never again after today. I swear to God, bro.
So, that was just, again, I'm just trying to cover my footing and just kind of explain to you everything that I was kind of um, thinking about. All right,
Okay.
so logic aside, now we'll go into technical analysis. All right.
Hmm.
Always remember, I personally don't trade before the 8:30 a.m. New York session stock exchange open. That's 9:30 a.m. Eastern time. And for you guys, that would be 6:30 a.m. Pacific time, right?
Hmm.
So in the CYPRX 2.0, I talk about this manipulation window, right? And so many people get confused and they're always like, well, what is a manipulation window and does it really exist and this and that. Now, I personally, and who mentored this to me, who taught me this, is somebody who has over 25 years of hedge fund experience. And they pretty much explained to me that there's a transition period between each trading session, between London rolling over into New York, between New York rolling into Asia when the new daily candlestick starts, and then Asia rolling into London. And so think of it as kind of market makers passing price action over to the next trading desk or next trading session or hours or whoever's going to control the markets next. And in between that, even though algorithms all throughout the day control prices, well, market makers and the people that are actually at these institutions aren't really at their trading desks and monitoring these things until specific times. And so when the New York Stock Exchange, because we're trading futures, opens at 9:30, think about that in terms of a bank as well. What times do banks usually open in the mornings? 8:30 a.m., 9:30 a.m., right? So before that, 2 hours before that, just like you and I, we wake up in the morning, we put our pants on, we go, we eat our breakfast, and then if you work a 9 to 5, you go to your job. You probably leave your house if you work a 9 to 5 job. I know none of us do, but if you did, you'd probably leave your house at 8 a.m. at 8:30 a.m. and then you'd get to your job at 9 and start doing your activity. So the banks is the same thing. So anything before that, if you're involving yourself in the markets, 9 times out of 10, you're involved in some form of trap, some form of enticement, some form of buyers being enticed or sellers being enticed before the actual meat of the session unfolds. The meat of the session, the actual move for that specific trading day, doesn't usually take place until after that session opens. So that's why I call it the manipulation window, because anything before that, you're liable to just get liquidated if you're in either buys or sells. And so for New York session specifically, I annotate to you guys that that's a 2 hour window that you should not be involved in price action before the session opens. And so you can see here, I have that manipulation box on. That's from 8:30 a.m. my time to 6:30 a.m. prior to the session. So from 6:30, you can see here to 8:30, I'm sitting there at my charts if I am monitoring price action and doing a pre-market analysis saying to myself, don't touch the markets here. I'm just monitoring, I'm just looking, I'm looking for traps, I'm looking for how the market makers set up, liquidity above highs or beneath lows. Bottom line is you don't want to be a market participant before the New York Stock Exchange opens. So when I came into the session today, you can see clear as day that this is consolidation, right? Price is neither making new highs nor was it making new lows. So all I was sitting here saying to myself was they're literally building liquidity. They're building liquidity above highs. They're enticing sellers with these massive bearish pushes to the downside, but they're also enticing early buyers prior to the session underneath of lows. As you guys can see that there's these massive pushes up every single time price comes into this bottom of the delta, right? And so this to me was just a clear representation of why not only were there no opportunities, but you don't want to be a market participant here. Then right when the New York trading session opened, let's jump down to the lower time frame. Right here in this bullish engulfing candle, you can see this is the 8:30 a.m. open. All right. So this is when New York session trading hours today, the New York Stock Exchange opened. And what I noticed when the market opened this rising is not only did price create a support, or at least try to create a support at a dark pool, which again is the 24728 horizontal green line hovering at the top of this buy delta, but that when they opened, this bullish activity failed to break above all of these previous lower highs. So you can see here, there's bearish structure. This, when we go over to the order flow, we're going to see that these were areas where sellers were throwing up a passive defensive wall, i.e., resistance, trapping buyers at highs, enticing early sellers. And then underneath of the lows, you're also going to see that they were enticing early buyers prior to the session. And
So they
so,
trapped early
again,
buyers,
say it again.
right? They trapped early buyers,
Exactly, right? And so
right?
and so think about it logically. Back to the beginning of the breakdown. Remember, we're at a higher time frame discount, and yesterday, New York session sold from way up above where price action currently is, and so did Asia, and so did London. So they enticed early buyers right when the New York session opened. You can imagine how many uninformed retail traders have their candlesticks probably red and green, right? Which is why I try to tell you guys to eliminate the colors from your charts so that way you don't get manipulated psychologically by seeing red and green candles and you make them a neutral color or a color that doesn't, stimulate dopamine like red and green does, right? Which is just another little tiny gem as to why my colors, my candlesticks are white and gray. They used to be black. They used to be green and gray. Like I've always changed my colors outside of the normal red and green candles. Regardless, though, you can see that they enticed early buyers. They failed to push aggressively above a resistance or above previous lower highs. And then, just like Aqua said, they dumped. So they enticed early buyers. Then they came down, they grabbed all that liquidity, and then right here, this is where it starts to get interesting. Right underneath of the buy delta, mind you, again, if you've paid attention and read and gone over the delta PDFs,
Oh my God.
what you'll notice is again thinking logically and applying sound, just simple principles. And it's that if the market is going to go lower, mind you, when we break a previous support or when we break underneath of a delta, if price is going to go lower, it's going to continue to make lower lows and lower highs. And so here, I don't know why my delta box disappears on the 5 second, but the delta box comes in, the bottom of the delta comes in right around there, and I'll change the colors just so that way it doesn't confuse you.
I think I see the pattern too,
Bro,
Sai.
it's so clear.
Yeah, it's right.
So
I can see it so clear,
so
bro.
right when price breaks, this is the delta box. Right when price breaks underneath of the delta, you can see that buyers make an attempt to defend and they show their hand by stalling price. So if this was sellers in control, you can see this bearish candlestick here failed to break the previous low. That is the first signal that buyers are making an attempt to defend at these levels. And they're pushing price back up into a resistance or a previous area where sellers, let me get my drawing tool, were in control. So I try to teach you guys to mark these areas off mentally because in real time on the seconds chart, you can't do this. But here, this is structure. So once price broke beneath the delta, we create a lower high. Price break structure again, creates a lower low. Here's a new lower high. Then it makes a new low. Then for the first time ever, we see a bullish engulfing candlestick that then leads to a failure swing low. And if sellers here in this area were in control, what would they have done? Think logically. They would have made a new low in the market,
Yeah.
a new lower high, and a new lower low, and they would have continued the pattern down. But for the first time ever, we see a shift in momentum. We see a failure swing low or a higher low in the market that leads to a higher high. After you see this pattern, you now know that in this area, buyers are attempting to show their hand. And so that doesn't mean that we start aggressively buying right off the bat. After we see this pattern, what do I try to teach you guys we need to see next? So after we see a low swept, we see a higher low come in after that breaks market structure to the upside and creates a new high in the market. So you can see clear as day, this is a higher high. And these were lower highs over here to the left-hand side. But now there's a new high in the market created.
Mm-hmm. Mm-hmm.
So now what do we want to see after to show us that buyers are now in control? We don't want to see number one, what break. If we're looking for buys, we don't want to see what created.
A lower low.
Exactly. We don't want to see new lows in the market. So this whole entire area here is now our new base. Why? Because this base led to a new structure high in the market, right?
Damn. Okay.
And so
Yes.
shortly after that, sellers try to make an attempt to defend their positions, which you can see here. You can see sellers trying to defend their previous positions. They throw up sell volume, but they fail. And buyers, yet again, respect the
Great.
base and they create a higher low in the market. So
Nice.
now we've seen a higher low, a
Yeah.
higher high, and now again, for the second time, we see another what?
High or low.
Another higher low. That to me was the signal that in this area of interest, buyers are now making an attempt to overpower sellers, which to me, as a as a risk taker in the market, I'm like, okay, I want to be able to take on risk here to get myself a sound risk to reward ratio. Because again, I don't know, nobody knows if price is going to do what it did today, but we wait for these confluences to give ourselves a better outcome, right? A higher probability that the trade is going to go in our favor. Okay. And so once we started to see this higher low form and I started to see these engulfing candles, this is where my buy stop today was. I had a buy stop above this previous lower high resting, and I started making my way down, trailing it lower and lower. This candlestick right here with this nice wick to the upside is the one that entered me into the market. I then took my stop loss and dragged it right underneath of the low because logically speaking, if this is the move that is going to take us to higher prices, we do not want to see the market make any new lows in the market. And if it does, then my trade was incorrect and I entered into the wrong area, right?
Damn, bro, you just blew my mind right now too, because I've never entered a trade where it came from the bottom and then took me. I've always had it come get me and then go, but this is a whole man. I swear to
Buy
God,
stop. Yeah,
you
buy
just
stops are game changers for sure.
Yeah, bro. When you said buy stop and then you explained it, it makes complete sense, bro. That just added to my arsenal game right now, bro.
Because I think what you're using is a buy limit, huh?
Yeah. Hmm.
Yeah, buy. Yeah,
Yeah, use buy stops, bro. So to continue to follow through why I gained confidence in this position, not only did we break back above the bottom of the delta, so you can see this bullish candle right here, broke back above the bottom of the delta, which previously acted as a resistance. Again, remind you, we broke here. The bottom of the delta acted as a resistance. Then price showed us without, again, without order flow. We're not even incorporating order flow, just using naked price action and the ability to see this shift in real time with your naked eye, thinking logically, if sellers were still in control here, they would have made a new low in the market. Well, they failed to do that one time. So this is one time they made a higher low. That led to a higher high. We came back up into this resistance, and sellers tried to make an attempt to defend. They tried to make an attempt to defend at where they previously sold from. And you can see here, again, in this leg, we see sellers. And so think logically, if sellers in this leg were in control, what would they have done? They would have made a new low in the market.
Facts.
And they failed to do it now twice. So this is once, this is twice. What gave
and
me
the
the
second time could have been
confidence?
a nice bit.
Yeah, what gave me the confidence to take this position was once we broke the resistance, we came back up into the buy delta. You can see again for the third time, sellers
Yeah.
try to make an attempt to show their hand here. And if they were in control, again, thinking logically, what would they have done? They would have made a new low in the market. And they did not. Now, this is the third higher low that comes in. And at the same exact time, that price broke back up into a buy delta. We have a triple moving average crossover. That put the icing on the cake for me for today's trade. I simply was just looking. I was going to sell this position at the 2-4, I think it was 9990, something like that. It was just the premium where New York session sold from yesterday. But then we came up, and when we tapped up into, let me go back to the higher time frame, go back to the 1 minute chart. When we came up into this 24876 institutional dark pool, I was like, all right, I might sell here, but then same thing that I just kind of explained to you guys now on the 1 minute chart, thinking logically, I did not sell this position here because when we saw this pullback, if sellers were in control, what would they have done? They would have made a new low in the market compared to the previous higher low, which existed here. They did not do that. And instead, we see buyers maintain the upper hand, and then they push price up into the bottom of this delta. This, now for the first time, you guys can see why I sold this position. Because right here, when we pushed up into the delta, here is the first time that sellers showed their hand enough to make a new low in the market. That made me a little bit fearful. I was already in profit. I was like, okay, it's Friday. I'm going to take my W for the day and I'm just going to get out. But here's the first time where sellers made some type of an aggressive attempt, even though they failed and got trapped, to break buyers. Right. So that's why I sold this position today. Nonetheless, though, bro, this was an easy ass CYPRX 2.0 strategy to the T. Not trading before the New York Stock Exchange open, seeing how buyers got manipulated right at the 8:30 a.m. open. They dumped price down into a discount. Then at the bottom of the delta, we see the CYPRX 2.0 pattern play out. We saw three higher lows on the 5 seconds chart come into fruition. And I entered with a buy stop into this position, simply just targeting premium areas where they sold from in previous sessions.
Wow, beautiful,
Now,
clean.
I'll go over the I'll go over the order flow real fast because the order flow is very clean on this as well. So if we go in here, you can see it, right? So here is prior to the New York session, I said I typed in my notes. I noticed that sellers were still throwing up defense prior to the New York session. So this area right here, you guys can see with this green triangle, this is the New York open. This bullish move right here that you're seeing is
Mhm.
this bullish move here. Is this bullish move here. This is the New York open, right? The bullish push where they enticed early buyers. That's the same thing here. And so what I was noticing on order flow is that these red triangles continued to throw up. These are sellers attempting to defend against all of these buyers. Mind you, again, every single time that buyers come back in and make an attempt to defend against the sellers, they fail to break into new highs. Right here, when the New York exchange opened, you can see a passive buyer, but then right at the tippy top, you see a blue box right here. That is a buy imbalance. So buyers tried to become aggressive, but they failed to break the previous resistance and they got trapped at highs. Sellers then start to become aggressive. You can see red candles with green buy volume trapped inside. This is a signal that buyers are now trapped and they dumped,
Damn, that's crazy.
right? Well, where did they dump into? They dumped straight down into the low, where you can see during the manipulation window, there was a trapped seller here in this area. So they were literally just going back to test the strength of the buyers that existed prior to the New York Stock Exchange open. Then right down here, you can see the pattern clear as freaking day. So price starts to come in to the bottom of the delta. Right here, you can see that resistance is broken. This is a new base that leads to a higher low. This is the first higher low that I signaled to you guys with the naked eye that leads into a new structure high. Sellers try to make an attempt to defend. They push price back down into the base to test the strength of the buyers that existed here, and they got trapped and failed, and buyers overpowered them, and then they made a new structure high in the market. So here's your second higher low. After I saw that, this is my BOS right here.
Yeah.
Price pulled back one last time. Sellers tried to make an attempt to overpower the buyers, and they failed yet again. This is now the third higher low that comes in. Once I saw that on the order flow and I saw that with my naked eye, I entered right here when we saw this trapped seller in the green bullish candlestick, and then it was off to the races. What's crazy too is Uzi took the same exact trade as me this rising, like literally same exact trade to the freaking T. So if you come up here, this was Uzi's entry. He entered, look, he entered at the second higher low that came in.
Oh
Oh,
shit, so he
nice.
entered on the second one, not the third one like you then. Okay.
Yeah, you know?
So that
So
one is that second one though is more high risk though, right?
yeah, I'd say so.
Okay.
But a nice fib retracement too on that
Hmm.
one. I can see
Yep.
it.
That's solid though. That yeah, that's sick. So
So I'd say that today, it was very hard to manage, especially if you were thinking that the market makers are going to continue to do what they've previously done in prior sessions, which is biggest mistake ever. Never think that they're going to do what they did in previous sessions, ever.
Damn, that's right. Yeah. That gets in our
Always think
spot.
of session as a brand new slate. Like we don't know what's going to happen. And so when
We
you
gotta
come into
react
the
to the
session,
now.
exactly. That's really good, Emiliano, because remember, we as humans are naturally inclined to be gravitational to the past and
Yeah.
then also marry a bias to the future. As traders, we have to master the ability to react to what is being presented to us in the moment, which is one of the hardest things that any human could attempt to overcome because of everything that's installed in us all of our lives. And most of us coming into the trading environment are already in our 20s, some of us in our 30s, and in your case, Aqua, in your 40s. So you literally have to unwire yourself from 40 years of programming.
yeah,
And that programming is 40 years of being taught to, you know, hold on to the past or think about the future and this, and that. And none of that matters in the
none of
markets.
yeah.
Also react, not predict. Big
Yes.
difference.